Hello everyone and welcome to a new video blog at elliottwaveforecast.com. In today's blog, we'll be taking a look at Shopify. As you can see here, we have the daily chart for the stock. The stock started the rally since October of last year. The rally started from the 13th of October. So an impulsive five-wave advance. We have the wave 1, 2, followed by another 5 waves to the upside, 1, 2, 3, 4, 5, to finish the wave 3, a wave 4 pullback, and a wave 5, which ended ideally this year around the July of 2023, so around 71. That was the peak that we saw recently. And since then, the stock has established a correction to the downside. Now, what we are going to explain today is the type of structure to the downside taking place and what we expect from the stock in the near future and even within the daily cycle. So the 5 waves advance that took place since October of last year is a bullish structure, which is suggesting that the stock should remain supported ideally above the lows from October around 23.63. So this move to the upside is ideally supporting further strength to happen within the daily and weekly cycle. But most importantly at this stage, is the stock ready to resume the rally or not? We can see that the pullback from the July peak initially traded within a 3 waves move. You can see here an A, B, C to the downside, which reached perfectly the equal X area around our blue box 47, 42. So buyers showed up there, and we can see after the earnings, the stock bounced strongly from there. So the first correction was in 3. After we had the 5 move, we got 3. The market usually corrects in 3, 7, or 11 swings. So we got already the first 3, which means the market now have 2 potential scenarios. The first scenario that we are going to be talking about is the bullish one, which means that the wave 2 in red here ended after 3, and the stock could be ready to rally into new highs and start the next cycle. In that case, the current rally from the lows after the strong reaction should ideally finish. We're gonna get a wave 2 pullback. This wave 2 will be the key to define if the next leg to the upside will happen or not, because as long as the stock is not making a new higher high, as long as it stays below 71, there will be always a chance of a double correction, which we'll explain in a moment. But for now, the stock should be finishing wave 1. A wave 2 pullback will happen against this 45 area. So this wave 2 pullback should present a corrective structure for the stock to remain supported. And then we can resume the rally within another 5 wave to the upside. And that rally to the upside should break above 71 to confirm that we have a bullish sequence from 2022. In that case, the stock will open further extension to the upside with an initial target toward this equal X area around 93 all the way toward 123. So this could be the start of a new daily and weekly cycle to the upside, and this could be also challenging the previous all-time highs for the stock maybe next year. Now, after this pullback, the stock could fail without making new highs, which will be switching to the second scenario. If the pullback here and the next rally will fail below 71 in 3 waves, because it all depends on the structure. If the move is corrective and fail below the previous peak, then the stock will be having a potential double 3 structure to the downside, still correcting the cycle from 2022. In that case, you'll be having 1, 2, 3, 4, 5, 6, 7 swings. So the initial correction was on 3. If it managed to rally to new all-time high, to rally to new highs above this peak, that's the start of new cycle. If this stock fails, then instead of 3, it will be looking for a 7 swing correction, still against 23.63, and this will present another buying opportunity similar to the previous one that we saw here within the blue box. There will be another extreme area after we finish this wave X, and this will present another buying opportunity for the stock to rally into new highs from here. So either 3 or 7, then the stock should be rallying into new highs, and you can potentially maybe later on, if the stock fails to make new highs, this could be another opportunity to buy it at lower levels, maybe around the 61.8 area, which is around 41, all the way down toward 34 area. So that doesn't mean we favor selling the stock. The stock has a bullish structure, a 5-wave advance, so we expect it to remain supported above 23. As you can see, we have the right side. So we only favor at this stage buying the pullbacks, either after it managed to establish a 5-wave advance and the next 3 waves pullback, or after it managed to do a 7 swings, which is a double take correction to the downside within wave 2. In that case, that will be another buying opportunity. After this correction ends, the stock will be able to resume the rally into new highs. I hope the idea is clear for Shopify. The stock should remain supported and it should be trading into new highs, specifically after ending this correction, either by the end of this year or ideally early next year. Have a good day, everyone.